Considering the current situation in this video, we'll delve deep into Tesla's latest developments, from their game-changing residual solar and battery storage solutions to their ambitious plans for humanoid robots. So grab your popcorn and join us as we explore this fascinating company. Is it possible for Tesla stock to reach all-time highs again? So how will they do that, and when would be the right time to buy? Before you do anything else, please make sure to like this video, then settle back and join us as we explore the fascinating world of Tesla and the future of sustainable transportation. Also subscribe to Tesla stock news. The business unexpectedly declared that it would not allow its automotive division's gross margin to drop below 20%. But in the first quarter of the year, they failed to meet this target. Although Tesla had promised investors that they would keep this margin throughout the year, the new price cuts are projected to cause the margin to shrink even more, which has caused investors to become quite concerned about the situation's scope. Some think that the impact of the pricing would be mitigated by decreasing commodity cuts, but Tesla's results showed otherwise. They not only missed market expectations, but also fell short of their projection, which caused Tesla stock to decline and made investors hesitant to make snap judgments. Taking into account the advice of top stock expert Dave Ives, who provided insightful information that may influence a person's decision-making process, is essential as we shift our focus to Tesla. It appears that this is a situation that requires more than just a cappuccino to handle properly. Tesla has been going through a difficult time lately with pressure from 6 price reductions. The company is now in a struggle to maintain margins while increasing unit sales. And while the stock has shown signs of recovery earlier this year, it now needs to show sustainable growth in China. The tricky balancing act for Tesla will be navigating through the price war and achieving a gross margin in the 20 range, excluding credits. Although I think the stock is oversold, it still needs to prove itself in the second half of the year. Tesla's profit margin is gradually declining and is predicted to continue on this trajectory in the upcoming months, despite the optimism of many testables. While there are a few potential bright spots to look forward to, the truth remains that Tesla may not be as lucrative this year as investors had hoped. If all goes according to plan, Tesla stock might once again surge, possibly approaching the 300 mark. The question is, how likely is the car to accomplish this, and what conditions must be met for it to happen? Let's investigate this more. Concerned by several Wall Street experts is Tesla's margin. Although the company did raise prices in the US earlier this month, it did so after a series of worldwide price reductions at the beginning of the year, so investors should still look at the big picture. This could cause advantage to erode. By maximizing market share and attaining economies of scale, Tesla hopes to become a mass-market automaker and pass on operating cost benefits to consumers. Keeping hope in the automaker could be the best course of action, since Tesla has the capacity to unleash considerable cost savings in the future. This strategy has the potential to reward investors considerably more than a limited volume, high-margin model. The question that remains is whether Tesla's stock could hit all-time highs once more. There are challenges given the company's strategic direction, which is focused on cost savings and market expansion, but it is not completely out of the question as time goes on. We'll see if Tesla can overcome these obstacles and raise its stock to new heights, if you've noticed that there has been a noticeable decline in Hectaway stock. However, astute investors have seen the trend and see a chance to investigate the company's other groundbreaking technological advancements. Moving beyond electric cars, even more alluring is the current low price at which Tesla stock is trading in relation to its worth. Some investors and analysts are still pessimistic. There is still a lot of optimism surrounding Tesla's prospects. Recently, the stock saw movement in response to a statement made by Mark Horton, the investor director at GAM Investments. Tesla stock currently boasts of pricing their earnings P ratio of approximately 45, compared to the broader stock market's PA ratio of 19.2. This is a significant drop from Tesla's peak P ratio of over 1,000 in 2021. Horton boldly predicted that the price of Tesla shares will never exceed 300 again, attributing this to the company's reduction in the price of its electric vehicles and its anticipation of lower demand while concurrently increasing production. The stock's trading volume fell to 46 billion shares, much less than the typical daily volume of 171 million shares, as a result of Horton's pessimistic outlook for Tesla. The stock of Tesla may continue to fall during the coming year due to a number of variables that could affect the company's performance, including fears about inflation. The economy as a whole has been severely impacted by rising interest rates and the threat of a recession. But despite these difficulties, the automaker is benefiting from a number of favorable factors. One of Tesla's unique selling points is that as of 2021, its profit margins typically outpace those of its industry rivals. A few important factors contributed to Tesla's exceptional profitability. The company generated an impressive $81.5 billion in total revenue, resulting in an operating income of $13.7 billion and a margin of 16.8%. This is noticeably higher than major U.S. rivals like Ford and General Motors, whose margins typically fall in the single digits. First off, the company's well-known brand means that significant advertising and promotion costs are not necessary. In addition, Tesla's management has effectively implemented vertical integration and manufacturing efficiencies, enabling in-house battery production and direct-to-consumer sales. These calculated actions have improved the company's margins and generated significant profits. Not only is Tesla a significant player in the automotive sector, but it is also setting the standard for artificial intelligence-powered self-driving software. By 2024, Tesla will be positioned to enter the autonomous ride-hailing market thanks to its cutting-edge technology. Early projections from ARK Invest indicate that autonomous vehicles may bring in a new era of ride-hailing, with a potential market worth of $14 trillion by 2027. The demand for these products has increased in the first quarter, with battery storage capacity deployed increasing by an impressive 360% compared to the previous year. This further solidified Tesla's position as an innovative force to be reckoned with. Tesla is still making strides in the residential sector, providing solar and battery storage solutions to power homes. Gradually, Tesla's manufacturing capacity has matched demand, enabling them to satisfy the expanding demands of the market. Additionally, Tesla intends to launch Optimus in 2027, a humanoid robot with applications in low-skilled jobs, particularly in manufacturing. As more electric vehicle manufacturers reach scale, operating costs are anticipated to decline, increasing sales according to estimates by ARK Invest Management. This presents a significant opportunity, making Tesla stock an appealing long-term investment. It is anticipated that the production of electric vehicles worldwide would increase dramatically from 7.8 million units in 2022 to 60 million units in 2027, a compound annual growth rate of 50. Coincidentally, this growth rate matches Tesla's production targets throughout the years. Electric vehicle charging times have decreased dramatically. While electric vehicles accounted for just 10 new car sales in 2022, Tesla notes that 4 years ago, it took around 40 minutes to charge an electric vehicle for a 200-mile drive. Additionally, Tesla aims to reduce this charging time to just 4 minutes within the next 5 years. These advancements contribute to the wider adoption of electric vehicles. According to Goldman Sachs, by 2024, the percentage might soar to 61%, notwithstanding the fact that unprofitable competitors, rivals such as Lucid and Rivian, automotive Tesla's pricing policy, which prioritizes long-term market share maximization over short-term profit, helps deter potential rivals. Tesla wants to become a major force in the rapidly changing electric vehicle market. Government regulations in the US and Europe, which intend to outlaw the sale of petrol and diesel vehicles by 2035, will help the company flourish. Electric vehicles are becoming more convenient and enticing due to rising petrol prices. According to its most current impact assessment, Tesla has acknowledged its influence on the environment and made action to mitigate it. According to Tesla, in 2022, the company's carb animations accounted for 27 of its total emissions from mining and battery manufacture, 18 of emissions from aluminum use, and 8 from steel. The other 47 emissions were from other sources, employees from downstream transportation and distribution traveling for work, and driving Tesla vehicles. This is the first time the business has provided accounting for objectives related to its supply chain, even though the supply chain for electric vehicles already produces more emissions than that of gas-powered vehicles throughout their lifetime. Conventional cars produce significantly more pollution than electric cars do. According to Tesla estimations, during the course of their typical 17-year lifespan, electric vehicles emit 55 tons less CO2 emissions than conventional automobiles. This is because traditional cars continue to use petrol. As it stated in its Investor Day presentation, Tesla intends to cut prices for its next generation vehicles by 50%. This could support additional price cuts while preserving the industry's highest level of profitability. Although Tesla stock has a ways to go before hitting its previous peak of 300 per share in December, been regaining ground in 2023 and may continue to rise throughout the year. What do you think of Tesla stock hitting the 300 mark? Share your assessment of the company and click the screen to see the next video. I'll see you there.